From our studios this week in Los Angeles and Tampa, this is Green Tagged Theme Park in 30. I'm Philip from Gantom Lighting and Controls, and I'm joined as always by my delightful co-host, Scott Swenson of Scott Swenson Creative Development. On Green Tagged, we look at the top news each week and we try and pick the stories we think matter most to industry professionals. And this week was earnings week. I did spend the entire week waking up and listening to earnings calls and making notes and then reading through financial documents, which was, I don't want to call it fun. It was pretty fun. I'm not going to lie.
It's fun for you. It's fun for you. The rest of the world is like, that's nice, but it's fun for you. So that's good.
It was a fun week, I will say, to get to hear where everyone is. We're going to try and get through as much as we can on these earnings. But I will tell you that the Disney stuff is a lot. And that I put that at the end. So it might spill over into our Patreon episode for that one. But since most of our listeners are obsessed with Six Flags, we're going to start with Six Flags.
Mm-hmm.
Hopefully we'll get to United Parks and then we'll go into Disney because there's a lot with Disney. As all of these parks do, they try to announce stuff around the earnings calls because they kind of want to maybe distract from some stuff. And the thing that Six Flags announced at the same time, which we'll try and get to, of course, is the expansion at one of their parks. So they announced earnings and expansion. And of course, United Parks announced the IP partnership and their stuff. And then Disney announced a TikTok partnership along with their earnings. So they kind of have these double announcements for each one. But let's just go one at a time. We'll start with Six Flags. So here's the thing about Six Flags. I'm going to really try and summarize it, and then we could maybe talk more about it. But looking at everything, this is a story of the new leadership successfully reorienting the company towards the idea of repeat visitation, which we have talked about ad nauseum. That is Riley's goal, which is repeat visitation. Yet they're still struggling because they have so much debt. That's it. That's what's great. It's these two forces. It's like the leadership, and they're moving the Titanic basically because the amount of parks and chains is a massive chain. They're reorienting it towards bringing guests back. So improving the park experiences, bringing accountability, doing events. All these initiatives that they are successfully implementing. And it is working. It is working because pass is up, revenue is up, attendance is up, all these things are up. People are coming to the parks more often. People are going to the events. Everything is working. But are they going to be able to go fast enough because they have so much debt? And the number, I think, that puts it all into perspective is they're planning 448 Halloween experiences this year from coast to coast, 107 of which are haunted houses, which is just, I think that puts them squarely as the winner in the amount of haunted houses that any chain is operating simultaneously. So maybe 13th floor, maybe could be maybe half that, but I don't know. That's a lot. But the numbers is what really puts it here. So basically, running the parks as a whole, they produced about 88.6 million in revenue. Okay, so in the quarter, just this one quarter. Okay, so 88.6 million in revenue. Okay, that was actually up from 74.5 million a year ago. So they had revenue. So 88 million. Hold that number. Okay. And then interest on the debt and all that stuff. So basically, the problem is they brought in 88, but then interest on the company's debt cost 102 million. So you bring in 88, but your interest is 100, and so you're negative 20. That's the problem, right? In one quarter, right? Because they have almost 5 billion in debt, right? So this is the problem. So the real thing here is, can they, with Riley's leadership changes and all of the stuff that they're doing, are they going to be able to raise per caps, which raises revenue and all that, enough to at least get equal? And then the plan is, which you talked about on the call, the plan is to sell the assets to help pay down the debt and delever them. And he's talked about some sales letter they have in Maryland and some other interest, but he said that probably wouldn't close until late 2027 or 2028. So I think that's the problem, is they have so much debt. They do have assets that they're trying to sell. They might strip more parks, who knows? But basically, they need to sell assets to delever at the same time that they are maneuvering to get overall visitation and spending up so they can on a quarter by quarter basis, basically make more money than they have to pay to service. So this is my take on it. We could go into all the individual things. We could look at the numbers if you want, Scott. We could look at the strategy, what he talked about with pass holders. We could look about the events and the capital plan and the rollout and what they've talked about. They talked a lot about uptime. He was pushed about July and gave a very interesting answer about whether or not stuff is attendance is softening. What do you think? What would you like to talk about, Scott?
No, I think that, I think you encapsulated that very well. In essence, they had a loss of $20.1 million before taxes.
Right. And then there's all this weird tax.
That's the real bottom line that yes. Well, certainly investors are going to look at. That is the real bottom line.
Right.
So I am thrilled to see that they are chipping away at that disparity of numbers of how much they owe versus how much they're. But again, I ask any of you, if you make a certain amount of money and you owe significantly more, I mean, this is exactly what happened to so many people on an individual level in the 80s. They charged everything. They were like, oh yeah, I'll just kick that can down the street a little bit, and ended up, in bankruptcy because they were in trouble. I am glad to see, on the one hand, I am very glad to see that the efforts are slowly scratching away at the problem. And it sounds as though with the combination of increasing repeat visitation, which I think should be number one, I think that should be their number one priority. And the only reason I say that is I have seen that save parks significantly more than constantly raising your prices.
Right.
It is better to make your money on clicks of a turnstile than on fewer clicks of the turnstile at a higher price.
That's right.
Especially when your problem is debt.
He said that.
Well, and again, John and I come from the same world, so we've seen it happen. We've seen it successfully work, and so that's a good thing. That's a very good thing.
I think that John has been saying everything right. To your point, everything that he said on the call, his strategy. At this point, this is maybe like a hot take, but I can't. I think he's doing an excellent job, actually, with the situation that he's in. And exactly to your point, he basically said that because some of the not all of the investors in the Q&A kind of understand, and so they were bringing up a lot of stuff that I think is not the point. That they were talking about. They were like, which number should we be looking at? And his point is, you should be looking at the same park numbers because they sold a bunch of parks. So, if you look at their aggregate revenue, they lost the revenue from all those other parks, right? And their per cap numbers are kind of changed because per cap is, generally aggregate, but you lost a bunch of parks, but those parks were underperforming. So you got a lot of numbers that are skewed here. So he was saying, you got to look at the same park numbers because that's what we're trying to measure against. And those are all up. And they did ask about how come they pushed him, like, how come that your per cap spending is down 1%? Shouldn't it be up because you lost a bunch of low performing parks? And he's like, no, because we're trying to increase visitation because we want them to come more frequently. And he talked about the lifetime value of a guest improving. So he wants them to come more than 4 times a year and to come to more events. And that way they'll spend more, but that makes the per cap number go down because they have one pass sale and that person then visits more than 4 times. So it lowers the overall per cap. So the people were I think he was saying exactly what you're saying. And he was just trying to clarify to a lot of the investors that don't really understand the theme park numbers and they're just concerned. And I will also add, just so that we don't get yelled at in the comments. So there was the headline numbers that you're going to see out there are like they lose 200 million or something. That is not the whole story, because what I'm concerned with is looking at how much the parks are making and how much that they're paying. So it's a $20 million loss. There was a tax charge that they got on here because basically normally when you lose 20 million, you would produce a tax benefit, but instead they reported 157 million tax charge, and that charge is what doubled the loss. But that is an accounting catch up. because companies book quarterly taxes against their estimated full year rate. And when the estimate changes, the correction comes in. So I looked at the 10Q table to verify that. But that's why I just because most of the news stations just said $200 million loss, which is not like quite right? Because part of it's a tax recalculation. The real number we're looking at is how much they're losing in operating. But Scott, you're right. He's doing exactly, I think, what you're saying.
Yeah, I think, and I'm usually the positive one, but I will say, I think they're doing what they're saying. I think this is part of a much longer term plan, but I also think it's fair to say they are racing to equilibrium.
They are.
They're racing desperately to get to a point where they are not losing money. They're not losing money before the company has to fold.
Yeah,
and
that's right.
And it is a multi-tiered strategy, and I think that all the tiers are right. It's good to see that they are working. But as we say so often on this show, we have to see how it pans out. We have to see how it's fully executed, because this can be, in theory, all the wonderful things, and it's working. It's certainly working in the short term. If it continues to work in the long term, that will be wonderful. And it will help. It's like they're underwater, and they got to get to the surface before they can't hold their breath any longer.
That's right. That's how I felt. I will say I agree with you 100% on that. That was my big takeaway from this. I will say, though, to give Riley credit, I didn't sense anything on the calls. He was not. You would not know that, from his. He's doing what a great leader does, which is calm, planning, reorienting leadership. He brought in all new leadership. The whole C-suite almost has been redone. I mean, he's doing exactly what he should be doing. And if you wouldn't sense that they're panicked from how he's presenting it, and he's kind of, yeah.
And my guess is he's not panicked. My guess is he's not panicked because, I mean, going back to my analogy of being underwater, free divers, the first thing that's going to kill them is to panic. So, he knows that. And he is also, now, although I did not hear this particular call, he is also very good about being both transparent and non-alarmist.
Right.
So he can be transparent and he can say, we've got these problems. But every time he says that, it's usually followed up with, and like I said, I did not hear this particular call, but it's usually followed up with, and here's the steps we're taking to correct it. And here's the challenge that here's the challenge. Here's how we're meeting that challenge and how we're going to continue to move forward. So, everybody, you're right. There's always going to be those clickbait headlines that are, Six Flags loses $200 million. Blah, 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 blah. There's always going to be that. Things are never as good or as bad as people want to make them out to be, because it's only when things are stellar or when things are absolute crap that people really want to read about them. So journalism, the journalists are going to find ways to get you to click, and some journalists more than others. But it's important to recognize that, no, the story, I'm not saying for a moment that the Six Flags story is great. The birds are singing, the sun has come up. But I think it is fair to say that they are, like I said, struggling to get to the surface before they run out of breath. And they're swimming in the right direction. Let's see how it turns
out. Speaking of swimming in the right direction, he did say something that was very interesting that sounded almost exactly like Scott, which is something you say all the time. He was pushed on the call. It was a very interesting question that was posed in the Q&A section from one of the, I think one of the banks, but they asked, essentially, is he going to be putting his CapEx into hard CapEx, which would be coasters, or soft CapEx, which would be events? And he basically said events, because they drive a better ROI. Basically, it's basically what he said. He says events are a very efficient way to deploy capital as we go forward, which is when Scott, how many times has Scott said it? How many Halla Screams could you run instead of one coaster? That's effectively, I think, what Riley said. Yeah. And
again, we were literally in the same park at the same time when that kind of discussion was being had. And, I think I don't know whether people necessarily, because what'll happen is there are people who just simply don't like Halloween. So therefore they see no value in doing a Halloween event, or they don't want to worry about staffing it, or they don't want to have they don't want to work the extra hours or whatever. But when you break it down to dollars, to profit and loss, he's absolutely right. You can continue to invest in big pieces of twisted steel, which only draw attendance for somewhere around 2 years. Or you can invest that money, you can invest less money and get bigger clicks, get more clicks on the turnstile.
Right.
And quite honestly, per caps, generally speaking, per caps for day product and per caps for event or festival product, whether it's Halloween or Christmas or whatever, the per caps for the events actually are higher because there's a fuse on it. It's limited. So people have to buy it then. Day product with your season pass holders buy merch the first time they come and never again. That's an exaggeration, but that's the basics. So again, John was, I don't want people to think that, yeah, he was in the office next to mine. No, he was like still way up higher on the food chain than I was. But we were living the same microcosm in the same park at the same time when this was proven. So I'm glad to see that he can take it and make it a bit more macro, and fingers crossed, hopefully we'll get there in time.
Right. Well, to your point about Halloween not being appealing to everybody, I think he did address that also, because while he did talk about how they're going to have, he's calling it America's biggest Halloween party, which I think is also a pretty good strategy to remind people that Six Flags has the biggest footprint of all of the chains. They have parks all over, and a lot of people have access to Six Flags parks. And when you combine that with a regional pass, and then you say every Six Flags is doing a Halloween event, then you get this 448 experiences, 107 mazes. 11 of them are new for 2026 with 4 new IPs he hasn't announced yet. So he did talk a lot about Halloween, but he also mentioned that the Boysenberry Festival, he called out by name at Knott's Berry Farm and said that that's a fantastic event that drives very high per caps. You just said that. Very high visitation and very high pass renewal. And they're looking to launch more food and beverage festivals with that same template at other big markets. So I think he is also saying it's not just about Halloween. Mm-hmm. It's also about how do we bring back the seasons of fun, basically, and expand it and to more places. He did also, another thing he mentioned that was interesting was about the data. Not many people talk about this, but he did talk about how they are working on, again, unifying their data so they can provide more targeted offers to people. So we saw that Christmas in July offer that they put out there for some of their parks. But I think that what he's talking about is a more unified data system that could serve up stuff to people. So anyway, I think he's saying all the right things. And if you buy into this vision, you could foresee sometime in the future where all of the parks do different festivals that are localized, because he talked about the park presidents and why they're important, because each park has its own entertainment needs and whatnot. So, you do all that, and then you can imagine where they would know who's attending the individual park and be able to market the food festival directly to them and incentivize them to come back. So it just is a nice flywheel. So I think it all makes sense.
And just to quickly circle back on your him gathering data and utilizing that to help make good decisions moving forward. And just even, it's so funny when these kind of things come up, because again, we never really know exactly what we're going to talk about. Philip does all the work, but we don't know where the conversation is going to go until we actually start talking. But 2 nights ago, I did a session at IAPA HQ, and we were talking, I co-presented with Matt Heller, and yes, there were some listeners in the session. So hi guys, I told you I'd mention on the show. Anyway, one of the things that we mentioned, even in just creating excellent guest service, is you have to understand your audience. You have to have the data in order to react to it. You can't just say, well, I think it's going to be this, or, oh, don't be stupid, it's always this. It's not. And to make things data-based, to continue to expand that that information gathering side is, again, another really smart move. So if all my money, all of my investments were all in Six Flags stock, and their success was going to make or break me as an individual, I still would not be releasing a sigh of relief, but I would still be watching carefully and cheering on from the sidelines.
Right. A few last notes to button up here. I'm sure commenters will ask about that. So he did bring up the uptime, and he specifically said our continuing work on uptime and throughput delivers more attraction experiences per guest, rebuilds guest trust, supports repeat visitation, and strengthens long-term pricing power. And they've improved in the quarter, although performance remains uneven. A lot of our commenters have said that, and I think he's aware. He said that the company said that their deferred maintenance would reverse in the second quarter to support uptime. So they are actively trying to improve the park experience, which he's been working on, but it's a slow process. He was asked about July. If you remember, we talked about Comcast saying that July was starting to soften. July, like the June, July, the summer basically was softening, which is what Universal talked about on their last earnings call. He was asked about that twice, and he sort of didn't really answer, basically. So he kind of gave exactly what you said, Scott. Exactly. He kind of was like, well, there were wildfires that impacted a lot of their parks that had to close for air quality. And then the July 4th. So he kind of talked about calendar. And then he said, but we had our most attended day ever on record in the chains in July. And so he kind of tried to push back. But when asked about actual numbers, like, can you give us a like number? He did not. So
well, and even that question probably asked by someone who listens to our show, because didn't we just talk about, is summer the new shoulder season?
Right. Yeah.
So yeah. So again, the industry is all there. We know what's going on. He knows what's going on. Yeah. It is a compelling question, but again, as you've said, he's doing all the right things, and let's just hope he can get them done quickly enough.
And Halloween's going to do well for them. You just know it is, because with their pass base growing by 6% already, and then their annual pass sales up 7%, like, those people are going to come back for Halloween and for Christmas. That's just how it works. That's why they bought the pass. Like, that's me saying it and Scott saying, but so I think they're gonna do fine the next few quarters, but then we'll see what happens. So speaking of the next thing that was announced on the same morning is, well, back up a slight bit. We're recording this on Friday, a little bit early. They supposedly today they have announced a new annual pass program, which we'll talk about next week, because I didn't have time to look at it. But yesterday, at the same time as the earnings, they also announced that Great America is going to get Camp Timber Trail, which is a 9-attraction family land for 2027. It's a very large build here, and it's all family-based. So, of course, this is going to what Scott and I have been talking about, where it's the same thing as the Looney Tunes area at Magic Mountain, where the family market, especially the young family market, is one of the only markets that's continuing to spend still right now as one of the strongest spending markets. And so this seems like it's geared directly to them. It's also, he was also asked on the call about the K-shaped economy and where he thinks their customers land on it, which was a hilarious question, which he also dodged. He dodged pretty expertly, because you don't want to say on an earnings call that all of our customers are poor. But basically, he dodged it, and he kind of talked about how they have premium Halloween upsell experiences. They're building more upsell experiences. But they're trying to keep the parks affordable, right? So he dodged it in a good way. But he also talked about these family offerings that they're building to kind of build out so that they can more target to demographics. Mm-hmm. And that's what this is. So I'm sure all of you have already heard already, but it's 3 all new attractions, 4 are rethemed, and 2 are classics that are just staying there and getting a little bit of reskin. The main one in this is the Skyhawk glides through the treetops, and it's Skyhawk, which is going to be billed as Michigan's longest, tallest, and fastest suspended family coaster. It looks really cool. That's what everybody is talking about.
Did you just
and they
say
have
Michigan's longest, fastest?
sorry, the Midwest, the mid. God, I
Thank you.
can't.
Thank you. Because I was like, A, the park is not in Michigan, and B,
The Midwest. There we go. I did the vocal warm up, so I'm still
there you go. Okay.
getting
I don't know.
tripped up.
I every now and then we get a little tech glitch, and I was just making sure that, I didn't hear that incorrectly.
So I'm sure everyone's right about this. What do you think, Scott?
So no, this is just so on par. It's so on par with what we've
Mhm.
seen in all the other parks. In fact, Skyhawk looks suspiciously like the new family coaster at Busch Tampa.
Yep.
So it is, and the thing I love about it is we are finally getting into that realm of the parks being comfortable calling it a family coaster, because
Mhm.
for so many years,
Yep.
so much of my career in the attractions industry, it has either been more thrilling, more dangerous, more terrifying than anything ever before, or it's a kiddie coaster. And so this is something that families can do together. You've heard me
Yep.
say it before. The days of, at least for the moment, and this may completely change, but for the moment, the days of the family coming to the park and setting up a meeting place and meeting time and everybody going off to do their own thing, those days, based on the current demographic, are pretty much gone.
Yeah.
The current family demo wants to do things together. They and I hate to sound like a broken record, but these are also the families that were established during COVID.
Yep. That's right.
So they're trying. They have a different sense of togetherness. They're not
Right.
a separatist family. So they want to go out and have their experiences together. Not mommy and daddy will watch you ride the stupid thing, and then you can go sit with Auntie June while we go on the coasters, because that would be really fun. This is a coaster everybody can do together, or a larger demographic can do together. And I think that is something that we've seen tracking with other parks. I think it is
100%.
exactly, and the fact that it is a full realm that is dedicated to this speaks volumes. I mean, when Six Flags, when Great America put in Rakshasa, that was sort of a, let's plop this down in the middle of nowhere. It's not themed to go with any of their areas. It makes zero sense, but it's a kick-ass coaster. This just comes across as more organized, more planned, more focused. There's intent. There's intent here, and I like seeing that.
It is interesting. A lot of what you're saying sounds very similar to the president of Vekoma, who I watched during IAPA Honors. She gave a presentation as part of the manufacturers panel, and she said basically exactly what you're saying, that the biggest trend they see is that families want to be able to do rides together, which actually is more of a need or a call for innovation from the manufacturer, because you have to make the ride be more interesting. Like it can't be what used to be like just a kid's ride, which is like pretty dull. Like it has to be interesting enough for the whole family to be engaged, but it also has to be safe or accessible to the child. And these two things previously, before technology, were difficult to achieve together. And so it was fascinating to hear that perspective, which is actually, I think, the inverse of what a lot of people think. They think that because it's a family coaster, it's going to be lame, or it's going to be, not as fun or whatever. But her point is, no, we've been improving our technology so that you can make it interesting for everybody, but also still allow the kids to ride it. That's what they're trying to do.
And also recognizing what terrifies adults and what terrifies children is not necessarily the same thing.
Right.
And you have to identify both of those so that you can find that happy middle ground. And if you think this coaster sounds like it's not going to be that much fun, look up the video, the promotional video of what it's going to, how it's going to look. Find the AI video of it, because it looks like, no, it is not. It's not Falcon's Flight in Qiddiya, but it's also not the Caterpillar coaster at your local fair. It looks like it is fun. It looks like it is zippy. It's got some speed to it, but there's nothing that's going to make kids absolutely wet themselves and be terrified. So it's an interesting. It is unique to me because it's the first time in my career in theme park where the family together market has been really focused on, and I love that.
Well,
Cool.
we didn't get
Right.
to United Parks, but we'll have
We
to
didn't
do
get to
that.
anything except for Six Flags.
That's
So there
fine.
you go. All right. Well, on behalf of Six Flags, our show is over. And on behalf of Philip and myself, this is Green Tag Theme Park in 30. Thank you so much for listening, and we will see you all next week.